Welcome to a fresh new edition of Markets Today Talk Back, the show where we tell you about 8 hours of market programming in just 5 stories, 5 headlines. I'm Prashant Nair. With me is my colleague Ekta Batra. Hi, Ekta.
Thanks, Prashant, and hi. Well, over the next 30 minutes, we will be discussing those top 5 headlines we brought to you, and our experts will be answering all of your stock queries as well. Joining us on the show this evening is Mayuresh Joshi on the fundamentals and Ashwini Gujral on the technicals. Thanks, gentlemen, for joining in. But let's get into another query then. Viewer Janardhan has written to us from Uttar Pradesh. He wants to buy 500 shares of Everest Kanto. He wants to know the right time to enter the market. Mayuresh, after all what you've heard, what would you recommend? Just stay away from a stock such as this?
Oh, absolutely, Ekta. And again, I think if he wants to be a long-term investor into the markets, I think he should go for qualitative names at this point of time. So again, auto as a universe is something that we continue to like. M&M specifically within this auto universe and Maruti are two of our top picks, where our belief is that the core business for M&M, specifically its farm equipment business, should do pretty well in terms of a 10% volume growth. Even the utility vehicle business, where the launches are expected to come through over the next few quarters, and the LCV and MHCV business along with the three-wheeler business should hold up. Account for the value of subsidies, I think there is still substantial upside in the stock. Similarly, the case for Maruti, I think, maintained its market share across variants that it produces. Again, the utilization at its Gujarat plant will basically take care of its fixed costs. And again, the kind of financial performance is going to lead to a very strong earnings growth going ahead as well. So I think don't go after such stocks. I think go for qualitative names. So within the auto universe, M&M and Maruti is a split in which you can do his investments.
Ashwini, I got a question on Punj. So Pramod Kumar is calling us from Delhi, and he's got a question on Punj Lloyd. Mr. Kumar, go ahead.
Yeah.
What's your question?
We have taken Punj Lloyd around 2 years ago. This is a good or keep it or sell out it?
And what is your price?
My younger brother has been given me 200 shares.
Okay, so basically, Mr. Kumar is 200 shares of Punj Lloyd, wants to know whether you should hold on or sell. Mayuresh, what would you tell him?
No, Prashant, I think there are better stocks to look at. So I think within the broader universe, KNR Constructions came out with a very good set of numbers. And if you look at its order book, substantial revenue visibility over the next few years, what it's also done in terms of execution and EBITDA margin staying around 19-20% should be sustainable around that levels. The working capital days are around 40-45, the debt equity is around 0.14, not much to complain. So I think have a look at KNR Construction on declines. I think the revenue visibility and the earnings profile is far better in this stock compared to a Punj.
Okay, well, let's get in a query now. Viewer SP Singh has written to us. He's been holding 26 shares of Nestle India at 6,883 for 10 months. Long-term investor wants to know if he should hold or sell. Mayuresh, what would your call be on Nestle, and what's your outlook say for the FMCG space?
Clear hold on Nestle, Ekta. Again, I think Maggi has rebounded strongly and very sharply as well. And the expectations from the management, if you have a look at the transcript, is to add more and more products. So I think it's a qualitative company, been around for hundreds of years. You're probably looking at stable earnings profile for this company. One might argue valuations on the higher side, but you have to stick with this company because it's a qualitative franchise. For the sector as a whole, again, I think you probably need to divide it between the food FMCG company and then the others as well, which are more diversified. Patanjali, as I was hearing the management of Patanjali on your channel, again, I think the kind of inroads that Patanjali has made, I think the competition in terms of the existing incumbents have fared up to that competition pretty strongly. So in that sense, again, I think input cost inflation did play out on the margins, but there is an element of pass-through as moats and demand that they've created around their brands are quite substantial. Having said that, I think Imami on declines in a staggered way is something we like from the FMCG bank.
Ashwini, way in the money, so you can easily do that. Ashwini and Mayuresh, thanks both of you for being with us here on this edition of Markets Today, as always.
Well, it's a wrap on the show. Thanks very much for watching.